Investment and Infrastructure Fund. So please take the dais.
How does this one work? Yeah. Good morning. A big thank you to AEEE and to Satish for inviting me for this session. My association with energy efficiency as a subject is now about 22, 23 years. Is that when it started? I used to work with Citibank, and we worked on a ADB technical assistance program for developing financial instruments for fast-tracking the introduction of energy efficiency projects in India. And that was with the Ministry of Power and BEEE. And we did some work, but when I look back, did we manage to even scratch the surface of what we were trying to achieve? I would argue no, right? So today, I'm very happy to be here. I'm going to introduce NIF first to you. I want you people to understand what NIF is all about, and I want to set the context of how NIF sees energy efficiency as a sector where we want to invest in, and how we can work together to progress private capital coming into energy efficiency in India. From here, I guess. This one, right? Sorry, we had forgotten to switch it on. So NIF was set up in 2016-17 as part of the Union Budget of India. The Government of India owns 49% of NIIF, and the remaining 51% is owned by a set of international and Indian financial institutions. So the names that you see in the first two top rows are the ones who are the shareholders of NIIF. We are proud of the fact that we have been founded by the Indian government. 49% is owned by the government, and the government also gives us 49% of each fund as an LP. Our three large shareholders, apart from the government, are the Abu Dhabi Investment Authority, Australian Super, which is a super fund, the pension fund of Australia, and Ontario Teachers, which is again a Canadian pension fund. Between these three, they own about 31% of the equity of NIF, and the remaining 20% is owned by other investors that you see. So Temasek, PSP, CPPIB, and a set of Indian financial institutions. The names that you see in the third row, JBIC, Asian Infrastructure Bank, these are our LPs. They have put money in our funds, but they're not our shareholders. We are commercial investors. Our mandate is to leverage the 49% LP money that the Indian government gives us, and we are to go out and raise the balance 51% from international commercial investors and put that money to work in India. So we are seeking commercial returns for all the investments that we make. And that's an important distinction for me to make here, that the government has various other pools of capital which it deploys very effectively when it wants to do projects which could, say, become commercially viable over a period of time. Those projects are not for us, right? One of the key mandates that we have is that we look to expand the universe of commercially investable sectors in India. So if you just imagine a large circle which has got all the infrastructure and other sectors that the country needs, there is a relatively smaller circle within that where commercial capital can come in. Right. My mandate is to obviously invest in that inner circle, but also to expand that inner circle, right, by putting in more sectors where NIF can take the lead in putting in commercial capital, and once NIF invests in that, it gives a lot of comfort to other private investors to consider those sectors for investments. And energy efficiency is somewhere is part of this mandate that we want to really focus on. We are currently investing across these 4 asset classes. One is our sustainable infrastructure business, which is our largest business. We have today a $2.3 billion fund. We are in the process of raising another $3.5 to $4.5 billion fund. We are India's largest domestic infrastructure fund. So in this business, we are very happy to take construction risk. We are builders and operators of assets in India. Right. We don't shy away from taking construction risk because we have got management teams and a skill set within NIF to manage such risks. The second is our private equity business, where we have a fund of funds where we give money to high quality GPs in order to anchor their fundraise. The third is a climate fund, which is of most significance to what we are going to discuss here. This is a $600 million fund that we currently have. $300 million has come from the Indian government, and $300 million has come from the Japanese Bank for International Cooperation, JBIC. And the mandate of this fund is to invest in private equity style in manufacturing, technology, and services. That's the first mandate, all along the climate theme. And the second key mandate is, of course, to promote Indo-Japanese investments. Fourth, we are in the process of setting up a credit business. We are targeting $2 billion of a credit fund, and this will again be focused on the energy transition area. So NIF has a, because we are 49% owned by the government, we have a quasi-sovereign positioning, and that helps us in A, opening of new sectors, and B, when we are investing in a project, it gives a lot of comfort to various stakeholders, including, for example, the state governments, that if NIF is coming into a business or a sector, it is a sector which has got commercial viability. Because as I said, going back to my earlier point, that we are commercial investors at the end of the day. If I were to add another box at the end after credit, we have a highly specialized team within NIF which is called SIPA, the Strategic Initiatives and Policy Advisory Group. And that group works along with various government departments at the center and at the states to basically the point I was making about expanding the inner circle, right? So if I were to take the case of energy efficiency as to how we can make more private capital come into it, it's my SIPA team which will work with the state governments and the federal government agencies to see how we can make such projects commercially viable, right? What, for example, I don't have an immediate example from the energy efficiency field, but we worked alongside the Union Ministry for Education to see how student housing as an asset class could be made viable. Right? So that's an example of how we would work. So just moving on to sustainability and climate, as I said, we are asset owners and operators. We on the supply side of renewables, we are 51% owners of one of India's largest renewable energy companies called Ayana. We are very significant lenders to this sector. We own 2 NBFCs, which are today the largest private sector NBFCs which are lending to the infrastructure sector. And the third box is the one which is of more interest to us today. We have made a number of investments in the climate theme, right? From the Indo-Japan Fund, which is our climate fund, we've made two investments. One is in a company called Ather, which is an electric mobility company. Second, we have invested in a company called Mahindra Last Mile Mobility, which makes commercial three-wheelers and four-wheelers. Out of this fund, we have looked at energy efficiency businesses also. And we are very keen to invest in our energy efficiency business in India. Now, the challenge that we face when we're looking to invest in energy efficiency, before that, what are the things that we as private equity investors look for when we are looking to put in money into a business? We want high quality sponsors, right? We want a business that has got a properly understood business model with identified profitability and cash flow parameters. And third, and more importantly, we want a business that is scalable, because it's the growth that creates value. Now, when it comes to the first point about high quality sponsors, we got those in India, right? I mean, in this room itself, we got folks who are people that we would be very happy to work alongside, right? The challenge that we face is scalability. We are not able to identify how we will be able to deploy $50, $75, $100 million of capital. The funds that NIF manages are relatively large. The climate fund itself is a $600 million fund. My target is to invest something like $75 to $100 million in each transaction. Now, I'm not saying that I need to invest the entire $75, $100 million at one shot, right? I'm quite happy to start relatively small, but have a clear roadmap as to how I can invest a $75, $100 million over a period of 3 to 4 years. The challenge that I see in energy efficiency projects, businesses that we've looked at today, is that we are not able to identify that roadmap. Right? And we need to work along with folks like AEEE and with other institutions who are working in this space to see how we can develop that. How can we ensure that there is scale which is available in this particular business? My CEPA team is very happy. It's available to work alongside you folks to see what are the policy interventions, etc., that we can support you with. No. There is obviously a need for demand-side interventions to achieve our net zero goals. 2070 is clearly a target that has been set by the Indian government. And Venkat, in his opening address, made some very powerful points, right? That for every unit of energy saved, there is basically 3 units or equivalent of energy that needs to be, Venkat, did you say energy that needs to be generated, right? Some number like that. So very significant multiple. So as an institution, NIF is, our role is to ensure that we invest commercially and profitably as India moves to its green transition journey. So energy efficiency is a no-brainer for us. We certainly see the commercial viability of energy efficiency. 22 years ago, when Satish and I, we were talking about how to create products for energy efficiency. At that point in time, the whole contractual structure was still not very clear. What is the energy services contract? How does that contract play out? How does the upside sharing, etc., work? But today, when I speak to energy services companies, that is now more or less, it's measurement, etc., still remains something to be done. But can we as an investor get comfortable with what we have today? Yes, absolutely we can, right? But the issue comes back to this point about scalability. And when we look at the number of sectors that are available to us, energy efficiency in buildings, energy efficient HVAC systems, district cooling, a whole host of areas are today available for us to look at. So one of the thoughts that we have is, we need to invest relatively large sums of capital. Is there a possibility for the Indian private equity venture capital ecosystem to come up with funds which are able to support the energy services companies at the stage at which they are in today, right? Relatively smaller funds who are able to provide more growth capital till they reach a stage where large funds like ourselves can come in and put in money. So that's an area where we are happy to explore to see how NIF can support. We have a fund of funds business, right, as I said. And if I just take you back to, to this slide, the names that you see there, EcoFi, Ever Enviro, these are not direct investments of NIF. We have put in money in a fund called the Green Growth Equity Fund, and the Green Growth Equity Fund in turn has incubated these businesses. Right? So maybe that's one way for NIF to work alongside you folks on the energy efficiency side. We identify certain funds which are relatively, which are in a position to invest in relatively early stage businesses, right? And they provide the risk capital that is necessary. And then at a particular time, NIF and the larger funds can come in. I was talking to my advisory team, and we thought of putting together a straw man of what are the policy discussions that we can have. Just a caveat, I don't speak for the government. These are ideas that we are happy to discuss with you folks and with other players, and we are happy to discuss this with the government as well. The advantage of NIF having a conversation with policymakers is that we bring the perspective of a private investor, right? And this is, we go and tell the government that, look, this is what private capital would look for. So for example, when the airport privatization happened some 7-8 years ago, NIF played a key role in putting all the concession documents together, right? Because so this is a role that we are very happy to play with. One is, how do we shape the ecosystem through the tenders that are coming? I spoke about the student housing asset class, right? Now, student housing as an asset class is relatively nascent in India. If you look at more developed markets, it's a multi-billion-dollar asset class, and we will get there. So as we look to issue tenders for construction of student housing, can we make energy efficiency an integral part of those tendering process itself? We of course have building codes, ECBC plus, ECBC super. I mean, how do we put all those things in the tender documents itself, so that when NIF is looking to bid for a student housing project, we build that into a project cost, right? At the same time, when we look at the financial modeling, we know that the energy cost over the life of that asset is going to be on the lower side, and therefore it makes economic sense for me to have such high quality energy efficiency built into the building itself. So that's wherever we are investing, right? So for example, if you're setting up data centers today, we need to have highly energy efficient data centers, not because we love energy efficiency and therefore we're doing it out of the charity and goodness of our heart. If we don't do this, our customers will not give us business, right? So when a Google or a Amazon, they contract data centers with us, they want a certain standard of energy efficiency, right? So it is something that the market requires. We need to move to a concept where, we need to move to a situation where the market itself, our investors are demanding energy efficiency in the buildings that we are, or in the businesses that we are going to be investing in. Second is in terms of, the government PLI scheme has been quite successful. The FAME scheme, Brian spoke about that. Is there some way that we can work alongside the government to make sure, to have a similar kind of a scheme where energy efficient products are getting some kind of a incentive from the government? Third is district cooling, right? I think India is at a stage where we will be seeing significant additional business districts coming up, right? And is that an area which is right for energy efficiency? Absolutely it is. How do we work alongside the government and with you folks to make sure? We'll be bidding for businesses as an investor in these new business districts that are coming up. And we would be very happy to both on the policy side and on the investing side support this initiative. Last is blended finance. Now, the energy transition requirements of India, if you calculate between now and 2070, we're looking at multi-trillion-dollar kind of investment that is required. And that's both on the demand side and also on the supply side. Do we have the capital to do this? No, we don't. Is there a need for us to, therefore, look at alternate sources of financing? Absolutely, there is a need. So one of the things that NIF is doing is that we are setting up a $2 billion credit fund, and that $2 billion credit fund is going to be supporting Indian businesses as they move on the energy transition space. What we need for such sources of capital or such pools of capital is that we need to get some of the international multilateral development banks or large institutions overseas to provide some level of risk capital on which you build commercial capital, so that there is a first loss kind of a guarantee which is taken by some financial institutions who can take that, and then we raise commercial capital and we have a blended pool of capital which is available. So these are some of the thoughts that I wanted to share with you. I just want to reiterate that we are very keen to help on both fronts, both on the investing side, because we think this is commercially a great idea for us to invest in, and second is on the policy side. Happy to carry on this conversation with AEEE and with other institutions who would be interested in this. Thank you.
Thank you so much, sir. So we have received a few questions from the audience.
Sure.
So due to time constraints, we are taking only a few questions. We are getting a lot of interesting ones that you can ask maybe at some other time, but we'll take a few here. So the first question is, how can sustainable procurement practices be integrated into NIIF's projects to mainstream energy efficiency in Indian infrastructure development?
So, look, let me give you a slightly philosophical answer, if I may. My apologies if it appears like that. As investors, we want to do things that create value for us, right? So when we have what you just said, in a procurement policy, we build in energy efficiency, we build in other sustainability factors. It is something that helps us. It helps us create high quality businesses, and when we exit, we create more value for our customers, who are basically pension funds, the shareholders, the citizens of India, etc. So we have within NIF a conscious approach that whenever we are going out and procuring anything for our projects, we have to make sure that it meets certain standards of energy efficiency, right? So that's how we look to do it.
Thank you so much, sir. So the next question is, what market mechanisms can the NIIF implement to prioritize energy efficient technologies and materials in large scale infrastructure investments across India?
Sorry, you said market mechanisms?
Market mechanisms and energy efficient technologies. Like, how do we integrate them into the large scale infrastructure development?
See, we can, as an institution, we don't have a market mechanism except to invest through our funds, right? So when we are looking to invest, for example, from a climate fund, we will do the best that is possible in order to ensure that whatever are the energy efficiency requirements, those are pursued. That's part of the commercial viability itself. But again, on the policy side, we're happy to work and develop a market mechanism. For example, the point that I made about can we have relatively smaller funds, venture capital, etc., who can come in and provide capital. That we can do through a fund of funds business, right? For that, I don't need any policy intervention for that, because that is part of my mandate. We can, if that fund is making commercial sense, we can go and invest. But again, on the policy side, The government has, for example, they are talking about providing capital to various parts of the economy. There is a discussion about it came in the last budget, about a deep technology fund. So that's an example where perhaps you could have a conversation with the government to see that is it possible for them to allocate some funds for energy efficiency, for risk capital for energy efficiency.
Okay, sir. Sir, we have another question which says that many state governments offer free electricity and water to certain segments of customers. Like, does these kind of incentives reduce the incentive for them to improve on energy efficiency when they're getting free electricity, water, or resources?
Well, look, yes, I guess the answer is that yes, it does. When state governments allow farmers to pump out as much water as they can because electricity is free, I mean, it is well recognized that yes, it distorts the entire system. Yeah.
Okay, sir, thank you so much, sir. These are all the questions. I'd like to request Mr. Pramod Kumar and Mr. Sanjiv Bhatia to please the stage and present sir with a token of gratitude.
That was super informative, and I think that both the ideas we're going to pursue it.
Good morning, everyone. Thank you so much, sir. Hope everybody's feeling excited to start with the first session of Feed